common frustration amongst Bitcoiners is thinking Bitcoin and crypto are the same thing. While Bitcoin is the first cryptocurrency, and certainly the most famous, there are over 20,000 official cryptocurrencies. Bitcoin has even carved out its own community. And hard as it may be to believe, many Bitcoiners actually hate cryptocurrency. My next guest, Terrence Yang, is an executive at Swan Bitcoin and can help us clarify some of these important details. Terrence, welcome to the Daily Drop.
Thanks for having me, Bobby. Great to see you.
Okay, so I am so confused about all of the different like Bitcoin and Bitcoin maximalists, and I know that, like we're buddies in real life, so we've talked about some of this stuff. But let's start at the beginning for our audience with Satoshi Nakamoto. Why did Satoshi Nakamoto create Bitcoin?
Satoshi Nakamoto created Bitcoin because he wanted a hard money that was hard to censor and hard to confiscate and digital. So because it's digital, it's usually very easy for the code behind the digital asset to be changed. And you can usually increase the supply and do things like that.
Right. And
so he wanted money that is very hard for other people and the state or governments to mess with, whether it's to censor or to confiscate or any of that.
Right. So it's really this idea of peer-to-peer finance with no intermediaries.
Exactly. What a lot of people would say decentralized.
Right. And I keep hearing this term hard money. What does that mean exactly? Hard money.
Sure. Hard money refers to money that is limited in supply, either scarce or credibly finite, as is the case with Bitcoin. So there will only ever be 21 million Bitcoin ever mined. Get yours while you can. And or it can mean scarce, like gold would be a hard money back when gold was used as money, because the supply can only increase so much. If you look at the history of gold, the supply increased about 2 to 3% a year, even when the price was going up a lot, which would encourage miners to mine more gold.
So I'm actually really curious to know what you think, because obviously like Satoshi's original vision for Bitcoin is very different from what the entire crypto community has become. And there's 20,000 cryptocurrencies and FTX, and he defrauded people. And like, how did we get so far away from this vision?
Well, I think bottom line is people want to make money, and they want to make money now. So they will do things to ride on the coattails of Bitcoin and create their own coin. You've seen celebrities, was announced today. Regulators and prosecutors are going after a lot of these bad actors who, whether they're celebrities or people like Sam Bankman-Fried, or as we call him, scam bankster fraud. People like him feed on other people's greed and fear of missing out. So Bitcoin is naturally very volatile. A lot of Bitcoiners just buy and hold their Bitcoin. So if you think about it, very little Bitcoin gets traded. The same Bitcoin gets traded over and over because a lot of us Bitcoiners just buy and hold it in our own wallet, just like you would buy and hold your own physical gold at home in a safe or buried in your mom's backyard or whatever. Not a lot of Bitcoin is out there to be traded, so the price is naturally volatile. When things are good, they're great. Price goes way up, and then other people piggyback off that and say, oh, you can buy this cheap coin that I created is the next Bitcoin. Sure.
Well, let me ask you that question. We only have 45 seconds before the break.
Yeah. Okay.
But so it's interesting because you're right? So we have Bitcoin who sort of created everything, and then you have essentially the variations of Bitcoin, which are cryptocurrencies, which have kind of screwed everything up. Is that fair?
I think, yes. They've muddied the waters and created a lot of confusion. So people think Bitcoin is like crypto when it's very, very different.
Mm-hmm. Yeah, look, and I think we're going to get more into those key differences We got Terrence Yang here on the Daily Drop. Welcome back to Daily Drop. Okay, so Terrence, I think we were having this conversation last week, and I think it's actually very useful for the audience, right? Because I didn't realize that there was a difference between Bitcoiners and Bitcoin maximalists. Can you sort of differentiate between those two terms?
Yes. So I'm a Bitcoiner. I love Bitcoin. It's all I've been buying since for a while now. I did dabble in crypto, NFTs. Bitcoin maximalists and Bitcoiners differ in one key aspect. I think Bitcoin maximalists really believe in Bitcoin and they don't want anything else to succeed, and no changes are possible. If you take the extreme version of Bitcoin maximalism, which is what a lot of people think Bitcoin maxis are these days because they're the loudest, the fringes can often be the loudest in our society. They don't want any changes to the code. They don't want developers messing with it, improving security, increasing engineering capacity, meaning the ability of engineers to work on Bitcoin to improve privacy, scalability, security, usability, functionality, UX, UI. They don't want any of that except in very, very rare cases, right? To debug something that's catastrophic. Bitcoiners, I think, are more reasonable in my view because we're open to ideas that might be good, that might come up in another coin. Usually not. Usually they don't work. But if you talk to Bitcoin core developers, they're often very open to talking to coins, what we call coins or alternative coins, other cryptocurrencies, and seeing if they can learn something from it and adapt it or adopt it into Bitcoin itself and improve some of the things I mentioned about.
Yeah, look, and that was, I think, really clear definition of these sort of two identities within the Bitcoin first community, right? But okay, so let's focus
or Bitcoin only community, I would say. We're all Bitcoin only,
right.
But some of us are more intransigent and might be much more adversarial. I can be that way too on Twitter. Twitter's a dopamine rage machine, and to get attention, you sometimes have to resort to things that you might not do in person.
Well, I think we're all like that on Twitter. Anyway, here's my point. Like, I find that it's really interesting because you really do have these sort of like nuanced personalities within the Bitcoin community, right? So like the Bitcoin maximalists in particular, they really are their own breed, right? Very loud, brash. Like, why does it so often seem that Bitcoin maximalists have conflicts with other Bitcoiners, other crypto people?
I think they care a lot. They're emotional. Some of them are emotionally stunted. I do want to say that in substance, we're basically the same. There's not much difference between the Bitcoiner and a Bitcoin maximalist. The difference is that Bitcoiners like myself, we don't want to embrace that term Bitcoin maximalist because that was a pejorative that Vitalik Buterin, the founder and basically de facto CEO of Ethereum, or thought leader, think boy of Ethereum, that he came up with to disparage Bitcoiners. So, sometimes Bitcoiners will be like, oh, well, we'll just embrace it and make it our own term and make it into a positive, but it's not. Nobody outside of some people in Bitcoin or most people in Bitcoin think Bitcoin maxi is a positive term, even today, years later.
It's interesting too, right? We're talking about rivalries. You really do see this sort of Ethereum versus Bitcoin thing happening. I actually didn't know that. So Vitalik Buterin, he actually, it would make sense. He's the one who created it. I've kind of seen Michael Saylor and Vitalik kind of go at each other on Twitter. Like, what is going on there?
Sure. So we Bitcoiners and Bitcoin maximalists, we agree that Vitalik and Ethereum are running what's basically a long con. They have an extremely complicated coin that was meant to be the world's programmable computer or whatever, and they keep morphing what Ethereum is about. Now, the only credible, uniquely valuable use case that Ethereum has, in my view, is launching coins and NFTs, which are like a bad version of digital collectibles that are pretty scammy because it enables celebrities to pump and dump, like Donald Trump yesterday, to pump and dump these digital trading cards or digital NFTs.
You know what, Terrence?
that
I'm gonna
they
go.
pump.
I'm gonna go to
That's
break.
it.
I appreciate
Okay.
how candid you. And you're pretty sassy. We got the sassy Terrence Yang here on the Daily Drop. Welcome back to the Daily Drop. Let's shift gears a little bit, Terrence. I'm gonna talk about asset class because I really want to get your take on this. Because nothing really moves like Bitcoin. Like, do you think it should be its own asset class?
Yes, it's the only asset that we have in the world right now that can credibly be an alternative to the US dollar, the world's reserve currency someday. And it's better because it's harder to censor and harder to confiscate. And we're in a digital surveillance world where the NSA, China, other countries, and Google and Facebook have all this data on us. And now everybody's using Chat GPT, training this AI that's closed source. It's owned by OpenAI, but it should be called closed AI because they moved it from open source to closed source. And we're just training this monster that could someday do very bad things to us. And we're just going to end up in a 1984 or more likely a Brave New World type of world where we think we have freedom and we don't.
I mean, look, it's a very interesting perspective. I want to focus a little more just on the asset class part of it, though. Because also you hear a lot of conversation about Bitcoin as digital gold. Like, do you think that comparison is accurate?
It's digital gold plus. It is like digital gold because, like gold, so there are three bearer assets that are worth having for most of your viewers who are maybe in North America. One is the US dollar. I'm sorry, Canadians and our Mexican friends. And the number two is gold. And number three is Bitcoin, because these are bearer assets that are physical cash, physical gold, and Bitcoin held in your own wallet when you self-custody. Those are very hard for the government or Facebook or Twitter to deplatform you, to confiscate, or to censor, meaning they can't stop you from doing a transaction. If I have Bitcoin, I can just give it to you. Very hard for anyone else to stop it. So the transactions are hard to stop, and it's hard to take away. Once I give you my Bitcoin, you have it and you can keep it. And because it's digital, you could be in China, or I could be in China sending you Bitcoin. No one can stop us. If I'm trying to give you $10 million of gold, Bobby, or physical cash, I'm not making it through customs. Even if I do, not only is my physical gold going to be detained when I arrive at your nearest airport, I'm going to be detained and you will be questioned as well. So the great thing about Bitcoin in an increasingly surveillance state is that as an asset class, it is like gold, but it's better because it's harder to confiscate and harder to censor.
Well, look,
and you can build on top of it. So that's why as a digital asset class, I think, you could say it's a good bearer asset. If you want to have a bearer asset class for hard assets like gold and Bitcoin, that's fine.
Okay, well, let's get into a bit of a comparison. And I will say, like, if we do get detained, it'll be because we're wearing the same shirt. Have you noticed that? What's happening?
I did get your email
exactly.
from your producers.
Did you get the memo?
To wear a blue shirt. Yeah, I got the memo.
Okay, so look, we're having some fun, but like again, let's stick with the asset classes because it is interesting too, because people are investing in all these things. And you hear it all in time, right? The mainstream media, they don't really understand the difference. They're always interchangeably referring to crypto as Bitcoin, all these things, right? So from an asset perspective, like how would you differentiate between Bitcoin and cryptocurrency?
The key difference is Bitcoin is uniquely valuable. It solves the problem of currency debasement and incessant money printing by the Fed and other central banks. And it's very, very hard to confiscate, right? It's a hard bearer asset, limited supply bearer asset. Crypto has no real use case. They use the blockchain unnecessarily. Blockchains are slow and efficient. They require many people to verify transactions before the transaction goes through. And so you have all these scammers promoting crypto, none of which have enduring value. None of them have a real use case other than scamming people through coins, launching baby coins through Ethereum or Solana or whatever the heck. And they're terrible. So crypto is in the same camp as gambling or the lottery or scams like snake oil. Bitcoin is
Terrence, tell me what you
better
really
than
feel.
gold.
You keep holding back like this whole interview. Look, we're gonna go to break.
I was told to be tame.
No, I appreciate it, Terrence. You're so much fun. We got Terrence Yang here on the Daily Drop. Welcome back to the Daily Drop. So Terrence, I want to get your take on this, right? It's because I find this very interesting, and I don't really know why, but I'm sure you're gonna have a really good answer. So of the 20,000 cryptocurrencies, SEC Chair Gary Gensler, he called Bitcoin the only cryptocurrency that is clearly not a security. The only one. Why is this?
Because Bitcoin. So let's go back to what is a security? It's something where you, as an investor, put in money with the expectation that you will profit from the efforts of others. This is in what's known as the Howey test because of the court case with the name Howey in it. So Bitcoin is not a security because Bitcoin you're buying as a long-term play, and you're doing the work as a hodler. So you're putting in work. It's very hard to hold Bitcoin and not sell it when the price is going up or when the price is going down or when it's flat. It's just very hard because you have all these negative Nellies, whether they're your favorite uncle at Thanksgiving dinner, whoever, telling you Bitcoin is a scam and doesn't make sense. The other offerings are securities because they're centralized, meaning there's a founder. There's usually a pre-mine where the founders give themselves and these VCs like Andreessen Horowitz tons of tokens, and then they buy a listing on Coinbase. Coinbase markets it, or Binance, or FTX. They market it, and they give you free coins as a naive retail investor. You get this free tokens, and that's how they get you. Just like a drug dealer will give you the first hit for free. I'm serious. This happens over and over. We have the research to back it up. I'm happy to.
No, it's just the way that you characterize things. It's very, it's just very creative. Well, okay, let me ask you a question though, Terrence, because it is interesting, right? Because this is really the fundamental debate about crypto security versus commodity. Yeah. So you're basically saying like you can't really manipulate the price of Bitcoin. It kind of is what it is, whereas all the other cryptocurrencies, in your view, can be manipulated by outside forces from a price perspective.
I would say whales can influence the price of both. Mm-hmm. The problem is that in the case of crypto, 100% of them are very, very easily manipulated by a small cadre of people. And the way they manipulate it is they create a lot of hype. So you're a founder of a crypto, right? You create this token, you work with Andreessen Horowitz or another VC to lend their name and do reputation laundering. And then you list the coin on Coinbase and dump it on the heads of US and other retail investors around the world. It's a total pump and dump scheme. And the reason people are buying it is not for the utility that it ostensibly has to do whatever, save on trading fees, if you trade on Binance or whatever. The only reason people are really buying them is speculation in hopes that it goes up. They don't disclose a lot of things. They violate Rule 10b-5, which anybody can look up. against US investors by omitting material facts that any reasonable investor would want to know before they invest, such as how much is the pre-mine, who's behind the project in terms of like what their true economic incentives are. These are often not disclosed to investors. And that's why we're finally seeing, now that there's some wider spread public outrage over Sam Bankman fraud or scam bankster fraud, in his stealing customer assets and then giving them to politicians and charities and his parents and himself, just gambling with it, having all the money go from FTX, a crypto exchange, a coin exchange, to Alameda Research, a hedge fund.
Look, Terrence, so I'm gonna wind the convo down.
Sure.
I don't want to, but we just have a timer on our clock. But I think that everything you're saying is so bang on post FTX. Thank you for coming, my friend.
Glad to be here. Thanks for having me.
So not only is Bitcoin different from cryptocurrency, they kind of hate each other. The narcissism of small differences is a Freudian theory where two individuals who are very similar usually end up hating each other as each wants to be unique. But just how similar is Bitcoin to the rest of the crypto community? And how will these differences establish their respective legacies over time? We'll see you next time, The Daily Drop.